Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, Tuesday. Interesting day yesterday. Quite a bit of movement, especially in the treasuries. And, we don't even have the big events out of the way this week with the inflation CPI and PPI coming out on Thursday and Friday. So, let's see where we're at. It looks like I restarted my machine and I don't have voice meter turned on, so I can't hear the music. I hope it's awesome though. Come over here to the charts. There we go. Now I can hear it. Okay. So here you see on ZN, pretty aggressive move up. Now there was an auction. I think that was maybe part of it. But there's also this comment by Bowman that kind of suggesting that things are breaking in the financial market and that they may need to pause quantitative tightening. But then also saying that they may need to increase interest rates again because she's concerned that inflation will come back if financial conditions get too easy. So what does that mean for treasuries? I'm not 100% sure. And I mean, they rose and then they came back. So I know up until March, we may be biased to the upside, but there are clearly some risks here in the treasury market. All right. Here in the S&P 500, really decent rally yesterday, getting all the way up to 4,800 by the end of the day. Wow. Like they really went. So still a ways back from, where we were the end of last year. We may be on a downturn though. I don't know. Let's see. We're down just a tad bit in the overnight. Oil actually had a rally for once in the overnight action, at least. I don't know what's driving that. I didn't see anything out there. Gold and silver are still kind of a little bit sideways. They did see some action yesterday when the treasuries were moving around. Kappa continues to languish. Dollar also about where it was, and then Bitcoin. Oh, I'm seeing some action here in Bitcoin. We might have something. Let's see here. Nope, I don't see anything. Oh, here's Bitfinex saying SEC set to approve a Bitcoin spot ETF with a custodian that they are currently suing for selling unregistered securities. Yeah, that would be ironic, wouldn't it? Well, so it doesn't sound like the ETF has been announced, but there is some action in Bitcoin. I will come back and look here. Hold on. So here at the bottom of the hour, what do we got? We've got Canadian trade balance coming in here in about 15 seconds. I'm going to come over to Twitter and Zero Hedge and see if I can see anything about 30 minutes ago relating to Bitcoin. Not on Zero Hedge. Let's see. What are you saying, Adam? Is it possible to place an order in the opposite direction when trading? Say I place a buy and it goes down instead of a stop loss, and I place a sell order to hedge the trade. What would be the difference between a stop loss and placing a sell order? Are you saying that you just want it to be a limit order? Maybe you want a stop limit order, which would be if price comes down here, you will place a sell, but you won't sell at the best price available. You will place a limit order at your specified price. Right. There's also market if touched. Market if touched is a little bit different. Market if touched is kind of like, say I want to enter at 20 and I think that there's going to be a reversal or something. So if 20 gets touched, I will hit back with a market order. That's a market if touched. But a stop loss is a sell order. Instead of putting a stop loss, place the sell order. Yeah. No one anticipated yesterday's rally in the treasuries? Yeah, I was a little surprised at least. I have to say, when it was kind of setting up, I did kind of see the setup and the signs, and I was kind of like, well, you know, sometimes when they're constrained, they'll kind of do that sort of stuff to kind of fool you. So like the technical signs were there, but yeah, I didn't know anything that would have caused. Well, and are you talking about equities or the treasuries? The treasuries rallying there, I thought was a little weird. Was say a little weird. I shouldn't say a little weird. It was surprising, right? Well, like we were talking about it in Discord and had a bunch of different theories about why it might be happening, but couldn't really pin it down on any one particular thing. But I think that's one of the things that's really frustrating about the market is, so if you think about it from the perspective of informational content, so if there's informational content that not everybody knows, then basically what that ends up meaning is it can go a lot further. And so some of the strongest trends tend to be the most bewildering. Like everybody's like, what the heck is going on? And that almost kind of like fuels it, kind of keeps it going, because people are like, this should reverse. And so they sell it and then it blows through them again, you know? I have noticed that since the mobile update to Discord, that a lot of people are leaving Discord. What I mean is if I can place a sell order when a buy order is going in the losing direction. Okay, so back up, Adam. Are you long or are you short? Like, do you already have a position? But I don't know if that's why Lucas is unhappy with Discord, because I'm assuming that Lucas is using the desktop app, right? So then it comes to, you get so much effing spam, and I really wish there was something I can do about it, but okay, so the drama in Discord has been that they rolled out a new update to their mobile interface, and people really hate it. And this is something about the internet that is always, I've always been on the other side of this. I think that Discord is just as good of a service as it was the other day, which is to say, I think it's the best chat application out there, but there are some things about how they moderate and deal with it that really, really upsets me. But people hate the mobile interface, and then that turns into, well, since you won't change it back, we're going to leave. Well, so sometimes those interface changes are made because of infrastructure changes, right? So you might not be able to just like roll it back, right? But instead, slowly figure out what they don't like about it and slowly morph that new interface to fix those problems. But some people are like, oh yeah, I'm just going to completely leave it. And in fact, there is like this, I want to call it open source. I don't know what the deal is, but there's like a Discord clone out there and stuff. You got 16. Yeah, it's ridiculous, dude. Maybe what I should do is I should try and make a honeypot user. So I have a robot, and every user that enters the Discord or changes their name gets scanned by the robot. So if somebody comes onto the Discord and tries to impersonate me, it immediately bans them. So you should notice when you get friend requests or messages from people impersonating me, you shouldn't share mutual servers. And if you do, say something in Discord and we'll see what's going on. Maybe the robot lost its connection or something like that. And I'm quite proud of this robot because it uses fuzzy logic and all of these other things. So you can't just change one letter and get past the censor. It picks up basically everything. And so what the spammers have resorted to doing is using one user to pull the list and then using another user to impersonate and send the messages to everybody. And there's nothing I can do about that because Discord has to ban them. So basically all you can do is report them to Discord. And Discord does ban them eventually, but it's a total pain in the butt. You can message me anytime that you want on Discord, but I will never message you. Right? So if you get reached out to by somebody with my name, it's fake. I was in a training group, but at some point everyone started talking about levels, and it seemed to me that they moved away from the core order. Yeah. Well, it's just this thing that why is technical analysis so popular? Seems to me like it's human nature. It seems to me that if I went and took a group of infants and flew to another planet, and then on that new planet we created a new society and we created a new stock market, and then we taught these people a stock market, that they would almost immediately invent a form of technical analysis trying to predict what is happening from the past action. Your brain is wired to look for those things. And it looks for that in basically everything that you see. It's basically your brain automatically tries to use regression to predict where something's going to go. It just seems to make sense easily by at this level, so yeah. But once you actually start testing them and you realize, this level doesn't predict whether it's going to go up or down very well at all. And then from there, it's kind of a question of how stubborn and in denial are you about it? Because most people will go to the next level, which is, okay, but maybe the level is important, but I need to look at other things. And then when I combine all of those other things together, I can predict what's going to happen. But again, back test it. You're going to find that it's random. Yeah. And then you start to realize that their levels are fuzzy and that the predictions that people make become more and more fuzzy. That's the thing that I think is one of the biggest tells is you've got an influencer and they've been around for a really, really long time. And the things that they say are really fake. I will tell you, I noticed this thing. That doesn't necessarily tell you that it's going to move up or down, is just an unusual thing. And I do a lot of that, right? But you'll have these guys that they'll say, oh, I noticed this thing. It's really super important. But then you realize that they're not telling you to explicitly go long or short based off of that signal, right? So what happens is they phrase everything that they say in a way so that no matter what happens, they can kind of come around afterwards and say, see, I told you that that particular thing was a big deal. I hope that you made money off of it because we did, yada, yada, you know? They totally do that. There are totally some influencers that do that. This is why there's some of these guys that's like, well, you know, I'm not going to hold it against somebody if they like technical analysis. But like, if you've been doing it for decades and you're still pushing technical analysis, you're probably a shithead. You know? What I'm asking is, if a trade is losing, can I place an opposite trade such that it will stop losing when it goes in that direction? So, man, that just confuses me more. I don't think so. Are you saying I'm long and it's going down, but I don't want to place a stop loss? I want to wait for it to pull back first, and then I'll take my loss? Is that perhaps what you mean? My sinus is starting to drain. Or ask what you said. Are you saying if I'm long and it goes down, I don't want to exit the trade when it hits a certain level? I want to wait for it to pull back, and then once it's pulled back, I'll exit at a loss. Is there any problem with placing a hedge in futures? No, you can totally place a hedge. It's just has to be in a different instrument. So we do that. We've done that before in the micros. It's actually been really beneficial. So let's say that I want to buy the 2-year. Well, notice that I've got like a really big spread in here, right? So it would be great if I can buy 4,300, but that might not be what happens, right? I may have to pay up and pay 4,309 or 431 with a market order in order to get long the 2-year at this moment, right? And what if as soon as I get into it, it starts moving down? Well, now I need to sell, and I would have to sell into 4.3, and the spread is just absolutely screwing me over. What do I do? Well, what you could do instead is just come over here to the 10-year where the spread is small and sell the 10-year. And you might lose a little bit on the spread, but you'll lose a lot less than you did if you didn't hedge it. Hold on, I'm going to try and clear myself out here. God, good grief. Okay. So you guys, a couple of conversations going on here. So Rodrigo asks, without stop is going to get stopped by the broker if not enough money for margin requirements. So generally speaking, if you are using day trading margins and your account goes below the day trading margin requirement, your broker will take you out of the trade, yes. Now, if you are using the full margin requirement, it's a little bit different. There is the initial margin requirement and there is maintenance margin requirement. And you can basically lose money until you get to the maintenance requirement. And then once you hit the maintenance requirement, you will be required to deposit more cash to bring your level back up to the initial margin. And if you don't, within a certain time period, like if you don't by the next day, I think it is, the broker can liquidate your account. Trying to see what you guys consider the best source for that data. So you can't place a buy and a sell on the same instrument. Well, okay. In futures, a short position offsets a long position. So when you buy, you are long, and then the way that you exit that position is by offsetting it. You are selling it. The reason they think about it that way and you use that terminology is like when you buy it, you've bought it from somebody, right? And this is a quote unquote futures contract, right? So you're contracting to buy a treasury from them at some point in the future, right? But are you contracting to buy a treasury future from that specific person? No, in the futures market, it's all anonymized and you're not you're not doing a contract with an individual person. That would be a forward. If I entered into a contract to buy or sell from you specifically, that's a forward, right? So, but it is a contract. So how do I exit the contract? Because, when I sell it again, I'm not going to be selling it from the person that was buying it before. Maybe he still wants to be shorted or whatever the deal is, right? So instead, what you're doing is you go and you sell another contract from somebody else. And so you're long a contract and you're short a contract and they cancel each other out and then you have no position. Okay. So if you buy in here and it moves in whatever, and then you sell it, that will offset your position and you will exit the trade. Okay. This thing comes up. The reason why everybody's kind of jumping on you a little bit, Adam, is because we've had a bunch of people lately come in asking about kind of trying to place this hedge trade because there are these Forex brokers going around saying, oh, look, you can put a buy and a sell in at the same time, and then you'll make money when it moves outside of that range or whatever the deal is. Which is really what's going on is they're lying to you. What they're really doing is they're doing a one order cancels the other. You have no position until it goes to the one degree or the other, and then it's buying once it gets to that point. And you can do the same thing over here. You can place a buy. You can place a buy over here, a stop buy over here, and a stop sell over here. And then if it goes above this, it will go long, and then you can have it one order cancels the other. So once it goes long here, it will cancel the sell order just in case it flips back around. It won't try and sell it or whatever the deal is, right? Yeah, watch trading is banned by the CME, although you can have two accounts. If you have two accounts, you have to pay the professional fee, though. So maybe we're right, and that was what Adam was kind of looking for. Because I think that what happens is these Forex brokers present this thing as like this foolproof strategy, and it's BS. It's basically a way for the broker to make more money from you. Basically a way for the Forex broker to generate more business. It's not an actually good strategy. I love the cookie analogy there, Paul. So what we can talk about though, and might help you, is the different types of orders. There are two major type of orders, although there's actually like 6 to 8 depending on the exchange. But the two basic type of orders are limit orders and market orders. And this is very important to understand how a market actually functions. And all of the kind of strange emergent properties that come out of that. So when you place a limit order, you go into the queue. So if I go and I limit buy at 111.26 right here, or let's say I have my sim account on, so I'm going to place a limit order to buy at 24 here, like far enough away that, okay, so now I'm in the queue, and you can see that the Jigsaw tries to estimate where I am in the queue. So it says that I am 2,901 in line, right? Now, if somebody sells, okay, they're going to be matched up with the current best bid, which is to say the limit orders with the highest price at the time. Limit buy orders with the highest price. So right now it's at 26. So there's 570 in line. If I was at the back of the line, there'd need to be 570 contracts trade before me, and then it would be my turn, and then I would get filled. Okay, so it's always a market order being combined with a limit order, except for in these really niche cases where, for instance, there's not a bid or an offer at 26 at all, and somebody puts a limit buy and somebody else puts a limit sell at 26, and they cross each other, and then those will get matched as well. But most of the time, it's market order is being matched up with a limit order. Okay. Now, all of the other order types are basically variations of those, of basically submitting a market or a limit order when a certain thing happens. So a stop order is this order turns into a market order if price trades or is bid above your price. So if I put a stop at 26.5 and orders go off at 26.5, then my stop order will trigger. Could also, if nothing trades there, but it just goes bid at 26.5, that'll also trigger it. Okay. You can also place a stop limit order, which would be, okay, I want to, if I'm short and I want to buy it at 26.5 to exit at a loss if it's touched, but I don't want there to ever be a chance that I'll actually end up hitting 27 because it's moving so fast. And with a market order, that could happen. So what you could do is you could place a stop limit. So once it's triggered, then it becomes a limit order. Okay. Now there's the other side around it, which is like, what if I want to buy it, but I want to buy it like when it comes down here, right? So I could put a limit order in there, and that would put me in the queue. But what I really want to do is I want to wait until it comes down there and then try and hit it in the hopes that it goes the other way. Then you can do a market if touched. So if 23 gets touched, then it becomes a market order to go in at 23. That's market if touched. Okay. And those are your basic types of orders. Okay, so let's let me go back here and see. Because I think I missed a couple of other comments. Okay, programming question here. Many people claim generative AI will improve in terms of writing code in the next couple of years, so they believe it is better to learn how to use a generative AI rather than coding. So there's this idea out there that computer science will essentially be defunct soon? Probably not. Probably not. So first of all, the innovations that would be required in order to make the robot better at coding than you would, to the point that I would just be trusting what the robot gives you, is still decades, if not hundreds of years away. So you got to remember that what these AIs are doing right now are basically predictive text. They basically say they look at existing code, existing stuff, and they say, based on what I've been given, what's most likely to follow from that, right? And they don't understand the logic. They don't understand what's actually going on. And although there's some things that they can kind of do to try and like find their own errors and stuff like that, I just wouldn't trust the robot. Another thing is that I have found very, very often, with the current tools at least, that there are some things that if you know how to do it, is just faster for you to do it yourself. If you know how to do it, it's faster for you to do it yourself. Which means like the effort that's required for me to ask the AI and take the code that the AI gives me and then fix all of the problems in it so that it actually compiles and does what I want to, tends to be greater than if I just wrote it from scratch myself. Right? Where the robot is kind of useful is when you don't know how to do the thing. It's like, I want to write to a file. Well, I don't know how to do that. And before, I would have to go and read the API and find a bit of example code, copy it over, and then try and adapt it to fit in to where I've got it right. Now the AI can do that part for you, right? But you can't just take what they give you at face value. You have to like understand that code. So I would very strongly advise against trying to take the approach to computer science, which is I don't need to understand code. That's probably not going to be our generation. Isn't that about what? Certainly, robots will replace humans as coders for basic manual iterative coders, much like Excavator has replaced. Yeah, I would think of. I don't think that AI is going to replace coders, right? But it will perhaps reduce the number of coders that you'll need. But with the way that this has always worked in the past, and I believe, of course, I can never prove. This is one of those things where it's like we're extrapolating in the future, so I can't prove that it's always going to be this way. But I believe this to be an inherent property of the world and economics and so forth, and that is that when you gain an efficiency improvement, it always results in more expertise being required. So what that means is that you will still need coders in the future, and heck, you might even need more coders in the future than you have now, simply because the amount of things out there using code and the need for coders has increased, but each coder will be 100 or 1,000 times more efficient than a coder is today because of the efficiency improvements that they get from the AI. That's likely what's going to happen. This idea that in the future there won't be any jobs, it's silly. It's nonsense. There's always going to be something that you need humans to do, or that humans are better at, or more efficient or cheaper for labor to do. And whatever that thing is going to grow, and everybody's going to go and do it. You really think that in this dystopian future where AI does everything, that people are just going to sit around all day? I mean, some people might, But there's going to be people that are going to want to do things and are going to want to, improve and work. And they're going to find a way. And they will create a completely different economy of some sort. It just might be like a very different kind of, it might be very different because your needs might be a lot less in that theoretical future, right? Like everything will be so cheap. Housing, won't be a huge issue. Food won't be a huge issue. You won't have to work a whole lot to be able to do things. Right. Yeah, machines don't take jobs from humans. They actually create more jobs. Only those jobs are getting increasingly more complex. I remember there was a time when we started to introduce self-checkout stands, and there was a concern that was going to reduce jobs because you don't need the checkout person anymore. And that has not happened at all. Hasn't happened at all. First of all, you need people to watch the machines. And then, they just like reinvested those efficiency improvements in other places. And so the grocery stores still hire just as many people. And if anything, the people working for them get paid more because they're more efficient. Yep. You know who was Ned Ludden? I haven't heard of that name before. But I would also add, though, that the big narrative change that we've seen in the last month or so, and certainly since we've gotten into 2024, is people saying that the great AI boom was a mirage, that these applications are not as useful as everybody said that they were, that the business opportunity is not as great as people said that they were. It basically has turned into a better search engine. Instead of searching the web and getting these websites that are really only designed to get your clicks and don't teach you anything or tell you the piece of information that you're looking for, you can get a robot that summarizes it for you exactly in the terms that you're looking for. And even with that, there's this whole thing where like you use an AI to generate content, and then that content goes out on the internet, and the AI uses that content and incorporates it into its model, and the AI becomes less effective over time. So now that doesn't, not to say that there aren't concerns about people's jobs being replaced, right? Because what will happen is overall the economy will continue to grow. Overall, the number of jobs available will improve. Overall, the efficiency of those jobs and the quality of life that those jobs will give you will continue to improve. But there might be certain jobs that you really enjoyed doing that or that you invested heavily into that aren't available anymore. And then you're going to have to switch jobs. And that's a real problem. And that's something that we've got to be aware of about who is going to get displaced and how we deal with that. There's kind of this whole thing that's like, change is going to happen. That doesn't mean that we should be completely insensitive to the needs of the people that are going to be negatively affected by that change. Because that's what we do with immigration, is we're like, okay, there's some people like George Soros in particular that believes that borders just shouldn't exist. Anybody should be able to go anywhere that they want. And so now here in the United States, we've had some 3 to 5 million immigrants come in during Biden's term. And that's going to significantly impact the demographics of America permanently. And that is, to some extent, going to displace certain people. So from one perspective, it's like in the places that those immigrants are coming in, housing is going to be more expensive because, there's just more people there trying to get a house. But then there's also like the political side of it, right? You're changing the demographics of the country. You're changing how the country votes. And obviously the people that don't vote that way are going to be upset about it, right? I don't think that it's very fair to, build a life somewhere, go somewhere, take a certain career, etc., 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 and then have somebody else like move everything out from underneath of you and leave you destitute, right? So there kind of needs to be some moderation there that we don't have in this society. Eating bugs and owning nothing. I tell you what, they really are pushing the bug thing, aren't they? I don't think it's gonna pick up, and it seems like a lot of places are smart enough to see it coming and giving consumers the information so that you're not eating bug protein, but good grief. It seemed like such a joke at first, and they're really doing it. Okay, on your second DOM on the bottom, there is an orange and yellow square at 4309. Oh, yes, that is a new feature of Jigsaw that essentially shows you the opening range. So the reason why the column is orange is because that's literally the only place that any volume has traded on the 2-year this morning. And the point of control is orange. So do you see up here on ZN 111.26? Oh, sorry, not point of control is pink. VWAP is orange. VWAP is orange. And then the yellow bars around it are the opening range. So you can see the yellow bars on the other ones as well, right? That was the opening range. We're currently above the opening range. So opening range traders, which I have never found any evidence to support the opening range trades, but opening range traders are going to be saying we should buy it here. My reading of order flow kind of says we are right at the highs. We're all lined up. So you would be like looking for stop runs and people pushing further, but we're really not, are we? Not seeing a lot of level 2 changes, not seeing a lot of volume coming through at 29. So this, I would overall be looking for it to revert back, except for that I'm still slightly long biased. So if it reverts back, I would be waiting for it to come back maybe to 26 and maybe buy it there instead. But I don't think I have anything super strong to say that is going to move up or down, other than that the overall long-term bias seems to be long until March, because they probably will cut rates in March to deal with the BTFP program expiring. But we'll see. Maybe we get another strong trend today. If the one thing I might be looking for is if the S&P 500 continues to sell off, and I mean right now it's just a pullback, right? But if the S&P 500 continues to sell off, you might see a flight to safety bid in the treasuries. I do need to look into, so going back to some of the earlier comments, because we were talking about hedging, we definitely need to do some more research about hedging. I think I'm on the precipice of figuring out some things. So one of the things that we've been looking at is momentum. So momentum is like, you might have a simple rule, like if it's a new high, it's the first new high for the last 50 bars or something like that. That means that we're having a breakout. Then I go long. And maybe you might add a filter on top of that, like a moving average filter on top of that, to make sure that you're not going against the longer term momentum, right? And you enter in, and then it will tend to continue to go through. Now the problem is that like when a market is trending, that is like not the most common situation, and an instrument can be in a non-trending environment for years and years and years. So in order to deal with that, you're trading this strategy across a large number of instruments. And when you have a large number of instruments that are not correlated, then you get a portfolio that performs pretty good. So the edge is actually kind of more in the construction of the portfolio, and then the selective, getting in only when there's momentum, kind of technical analysis side of it. Okay? So I don't know if it really it is a form of technical analysis, I would say, but it doesn't verify like the underlying theories behind technical analysis, right? Anyways, okay, so one of the things that I have learned and kind of knew, but I'm starting to learn more explicitly and like seeing how they actually do this analysis and so forth, is that treasuries show a very strong degree of momentum. The treasury markets are one of the strongest contributors to profits for momentum strategies over the last 10 years. And as far as I can tell, there is also very strong momentum effects in the yield curve. So I think what I can do is I can come in and I can kind of run a momentum strategy on a spread. And based on what the spread is doing, I can make trades and make decisions and kind of do it at a higher level. Doing the same sort of momentum and mean regression sort of strategies that these CTAs use. So once I get to there, then I can start to look at some of these. So as an example, some of these other things that I'm looking at, a really common strategy is just to be long the commodity and short the future. And usually in a normal market, the future is more expensive than the commodity. And as you come closer to the expiration, they will converge. So if you're long the commodity and short the future, you'll tend to make money. The only problem is, like, if I were to do that on treasury futures here, right, I'd have to have $100,000 per contract that I do it with, right? And how much are you really making from it? It's not really worth it. Okay, but in micros, with the micro yield futures, we can kind of do that sort of a strategy, maybe. For instance, I might be able to go long. I might be able to take a position over here in ZB and a position over here in the 30-year and make money off of those. As, I would have to do a lot of math to do that, right? Or I can just trade the yield curve here, and you make a certain amount on the yield curve, and then once you've built up big enough, then you can graduate to bigger instruments, just doing the like hedging strategies and stuff. Let's see here. We're still sitting at 30, aren't we? Yeah, that's been quite some time. They're kind of getting maybe some signs of a liquidity hole here at around 29.5 as well. But, remember yesterday we were kind of in this spot, and then we got above 112 and there was a bit of a stop run, and then it just kept going, right? So do you think that the same thing will happen today? Or are they going to come a little bit short? Because if they came a little bit short, I could totally see sellers trying to really shove it back the other way. Checking Discord to see if there's anything interesting over there. There is. The robot has banned some people. EU watchdog moles probe on Microsoft's OpenAI partnership over competition issues. Good. Because I think what OpenAI is doing is kind of a little shady. Atlanta Trump prosecutor accused of secret disqualifying romance with District Attorney Fani Willis. Okay. Logical bullish view on U.S. stocks is flawed. That looks like one to read for later. Buckle up for a bump in 2024. They still want short in equities? You're right. They're still selling it there for sure. I would, in fact, I would say that the amount of selling, like the net change in contracts, is pretty significant considering that we haven't opened up yet. Like getting almost 2,000 contracts short is pretty big change for pre-market. Because like a 5K change is like a significant change over there. Let's come over to X to see if we got anything on X. Oh, and by the way, what did Bitcoin do? No, they haven't really done anything since that 6 o'clock bump. There probably was some news over in Bitcoin, but I don't know what it was. Jimmy Urio says, I've never seen someone say that something was a threat to our democracy who wasn't pushing a solution that wasn't actually a threat to our democracy. Have you seen the new Peter Zeihan? No. To be honest with you, I think it's overrated. So, I think a lot of people take this approach like Peter Zeihan is an authoritative person, and when he says something, we should take note of it. Nah. Like what for me, when Peter Zeihan says something, it's like, okay, he said something. We could look at the individual things that he's saying and maybe do them for ideas, but I'm still gonna, use my own framework to say this is nonsense or not. I tell you what, I think the theme this month is it's becoming more difficult than ever to be an informed trader because there's just so much nonsense out there. Hey, look, they did come back to 26.5. That happened awfully fast. Well, I don't know if it's a long or a short, but if I was going for a long, I think that the view out there would be great. Anyways, when it comes to the election, I just see so much cynical knee-jerk reactions that, I really think that when you look at what these people are saying, you've got to say, like, no, it doesn't quite work like that. So, like the one that I think is the most silly is the one that Michelle Obama is they're gonna replace Biden with Michelle Obama. I think that one is just so funny. There is not a single piece of real evidence to suggest that that's what is going to happen. It is entirely a conspiracy theory, which is like, okay, I think that they're not going to run with Biden. So who are they going to replace? Well, the most popular person I can think of is Michelle Obama. And Obama wants to continue being president, so if they get Michelle in there, then it's actually Obama as president again, and yada yada. Like, that's the logic that they're using to do it, right? But there's not actually any empirical evidence to say that, like, that's what's actually going to happen. Similarly, they come in and they say, well, what might the Federal Reserve do because of an election? Well, I think that the Federal Reserve hates Donald Trump because I'm a conservative and I hate the Federal Reserve. Therefore, everything that the Federal Reserve wants to do should be something that I don't like. And if I like Trump, then they must not like Trump. I think that's the logic that they use to determine this sort of thing. They say, I don't think the Federal Reserve wants Donald Trump to be president, so they're going to do everything to spur the markets on in order to get Biden elected. And this is like Peter Schiff yesterday was just straight up saying this shit. And I'm sorry, but that's just not the way that it works. Okay? The Federal Reserve Board is a board composed of multiple people. Half of them are Republicans. All of them are smart economic people. I think this comment that you got from Bowman yesterday should be like a really key clue about where they're actually at, because they understand, like, look, the worst thing that you could have happen for Biden's reelection chances is you reduce interest rates 3 times and that causes the markets to just go haywire and cause more inflation. Then Biden would lose for sure, right? So this, let's make easy money policy easy for the election is kind of like, no. I mean, I think that the Federal Reserve does want to be as apolitical as possible. They don't want to rock the boat going into an election year, but do they ever really actually want to rock the boat? Not really. Not really. So I think that take is kind of silly, and I think it would be irresponsible to invest your money based on those theories, essentially, right? I guess maybe you could do it on a betting website, right? Go to the betting markets and bet that Michelle Obama is going to be the next president, but I wouldn't invest based on it. So, and coming back to Peter Zeihan in particular, the big issue that I have with Peter Zeihan is that he is not a foreign policy expert. He posits himself as a foreign policy expert because he did work with, consult with the foreign policy agencies and so forth. But what he was consulting with them on was demographics, right? So understanding the demographic decline in China and how that's going to affect China and the world in the next 50 years, then I want to listen to Peter Zeihan. Okay? But how the Israel-Gaza war is going to go, I don't give a shit what he says. I don't give a shit what he says. I don't think that what he says is going to be very predictive at all about what's going on there. Nor do I think that he has any kind of special insight on political parties in the United States. Fed will follow the bond market, not the other way around, higher for longer and just one until the bond market dictates other. Well, yes and no. So I think that the bond market is wrong. To just to be straight up, like that's like way oversimplified. But here's what I think is happening: when you start cutting interest rates, okay, there are certain, let's say, tendencies, right? So the average cycle, the average interest rate cut cycle is yay long. It lasts for a certain amount of time. This is what happens and all of that, right? And so what I see in the bond market is that because they're absolutely sure that we're into a cutting cycle now, that the market is saying, well, this is how far they usually cut. And that's why the market has gone straight to 6 cuts this year. I don't think that there's any way that they do 6 cuts. But the reason why the market is pricing that is because they're using the past history. So if that's true, and that pricing is happening because of all of these models that are trying to predict the depth of it based on past history, we're in a situation where they're extremely likely to be wrong because the entire economic situation right now is unique, right? Have we really ever had a situation where you had major inflation, you raised interest rates this high, and then it just solved the problem and you normalized things and everything was hunky-dory? That's never happened before. Okay. So how that actually plays out Nobody really knows. Now, the other side of this is, I do think that the bond market picked up on something back in October that I did not. And that is that there is a problem in the funding markets right now. That is not necessarily so much related to the absolute interest rate as much as it is quantitative easing and all of this and that. You have these small banks that are underwater and they can't really do a whole lot. And then all of the funding has dried up. You used to have trillions of dollars in the reverse repo facilities that would come in. This was like extra money sloshing around that during the day could be used for anything. And that's almost all gone. So the quantitative tightening has really tightened the markets to the breaking point. And so, as Bowman was saying yesterday, the Federal Reserve has to think about pausing quantitative easing and how they're going to deal with that in order to avoid creating a financial crisis. So they've got this thin line to walk where they kind of have to go easy on the balance sheet, but hawkish on the overall interest rates to avoid inflation. Right? You know, got to avoid inflation on this one side, and you've got to avoid breaking the banking system on the other side, right? And so I think that the markets correctly saw in October, and I don't know why it was at that point, and I was not informed, and I missed it. But they seemed to realize that we were at the breaking point, and that the Federal Reserve was probably going to have to start cutting interest rates or doing something, right? And that's kind of what's led us to where we're at. And like one of the key pieces of information here to know is that the BTFP facility was only authorized basically to go for a year and basically comes up for renewal in March. And the banks have been using this facility to basically create an arbitrage trade where, you know, they use this facility and then they immediately turn around and buy something else with it and make a little bit of profit from it. And that's a political issue. So they can't really renew the program in exactly the way that it is right now. They would have to, at the very least, make changes so that the banks can't take advantage of it like that anymore. And that's what kind of creates this drop dead date in March where, you know, probably in order to make sure that we get through that, they cut interest rates. Yeah. Let's see here. Peter Zeihan says that the Republicans' base is smaller, but much more diverse and with unrelated goals: pro-military, pro-business, pro-life, pro-law, and order. So kind of, I don't think that that's necessarily true. So here's the issue. Number one, left versus right in the United States is kind of weird, right? Conservatives aren't actually conservatives in the purest sense of the term. Really what conservative means in the United States is anti-government, anti-federal government, basically. You want the federal government to be smaller. That's basically what conservative means in the United States for the most part. And pro-religion. But everything else, when you think about conservative, it has to do with the size of government. Because if conservative is about like respecting past traditions and systems and having reverence for the things that came before us and not screwing that up and taking a careful, cautious, intentional approach to progress, then conservatives would be the most staunch defenders of the Federal Reserve. Okay, but they don't like the Federal Reserve because it's the government. It's the government modifying the monetary supply, and they don't like that. They don't like the government having any kind of power like that whatsoever. So really, conservatives is anti-government. Okay, and the issue with that is that Americans in general are not necessarily anti-government. Since World War II, essentially, Americans have come around to the idea that we want to have maximum freedom, but that there are benefits in having certain government programs. Right. And the conservative track has always been so anti-government everything, and that's kind of what turns off a large portion of the populace against them. Right. But what has happened more recently is that the Democrat Party just sucks. like really, that's what it comes down to. It's like, okay, China comes in and will do things to influence politicians in a way that benefits China, that ships jobs overseas, and politicians will sell us out. Now, both Republicans and Democrats have sold Americans out to China on certain occasions. It absolutely happens, okay? But what's the difference between Republicans and Democrats? Republicans are like, this is absolutely awful. We shouldn't be doing that. They're trying to get people in there that are going against it, but it seems like it doesn't go that way. That's kind of the problem is, but they're against it. Whereas Republicans are like, no, all this stuff is great. And Democrats just like fully embrace selling you out. And it has gotten to the point now where average everyday Americans are starting to realize that they're being sold out every day by the Democrat Party, and they're tired of it. And that's the current political dichotomy that you have in here. Part of the reason why Donald Trump is as powerful as he is that there are a lot of people that would typically be a part of the Democrat coalition or be moderates, unengaged voters that can see that they're being sold out and see Donald Trump as the only person they trust to not do that. That's why you get in the dynamic that you have, right? So what is likely to happen from that is that eventually the Democrat coalition will break up and reform into something else as the Republican Party continues to solidify behind being the anti-globalist party instead of being a, quote, conservative party. Right? But what impact that has for elections right now, I can't say. I mean, having a breathing in there and feeling some stuff, I'm concerned that I have walking pneumonia now. But it might just be like a temporary thing. As my sinuses drained this morning and everything. Peter Zeihan for a prediction of a negative price on Bitcoin will go down as one of the absolute worst takes on anything in human history. No, it'll never go negative. No. Man, okay, so we did breach a new high, by the way, at 30.5, kind of out of nowhere. It is timed with the open, and I want to point out that this was basically the exact same time that the strong long trend came in yesterday, so I don't want to like poo-poo on like it's not going to continue to rally or anything like that. Anyways, so I was going to say Bitcoin. I honestly do believe that at some point Bitcoin is going to be worth basically nothing. It won't go back to zero per se, but it's going to have such a decline that it's not going to matter. It's going to die again. It kind of looks to me like Bitcoin has another run or two left in it. Okay. But I think that there's a real problem there that Bitcoin is not good for the world. And there's a certain point at which Bitcoin becomes popular enough that it starts to cause economic problems and the government is going to step in and do something about it. And especially since right now the price seems manipulated and they're, like Tether is just basically printing money, right? Do you really think that the federal government is going to sit by and watch some guy in the Cayman Islands take over monetary policy for the world? Yeah, that's not going to happen, right? So at some point, they are going to deal with it. Now, it could get interesting because if Republicans get in, they're promising that they will be more favorable to Bitcoin. This is the thing that I think is kind of funny, is that it's turned into Republicans like Bitcoin and Democrats hate it. Except for I don't really feel like that Democrats are doing that all that much about it either. So. And then the larger issue here is that the idea behind, or at least the Bitcoin maximalists theory, is that eventually Bitcoin will become the currency of choice for people, that it will become less volatile and a good store of value, and people will prefer to have their money in Bitcoin than other things, and you'll start using that for transactions instead of the United States dollar. No. If that happens, what will happen after that is you'll have a financial crisis, and that financial crisis will be so deep and so long because you're using a deflationary currency that will be at the end of it then. And then if that's still not enough, I also think that when the blockchain completely mines out, that might have an impact on the supply and demand dynamics in Bitcoin that would also make it unsuitable as a currency. So I think eventually it will, but for now there might be another run or two in it. So like maybe this time we get to 100,000, and then maybe next time we get to 200,000 or something like that, right? I'm not a fan of it. I don't want anything to do with it. I'm even though there is a possibility of a Bitcoin rise here with the ETF and everything, I'm not going to participate. I want to see a lot of highly educated people who are authorities in their fields, and then they express their opinion on the topic they know very little. Well, it is a particular problem with Peter Zeihan, though, because if all Peter Zeihan did was talk about demographics, like nobody would give a crap, right? It's like way too narrow of a field. So I have to come in and start giving my opinion on everything that's going on in geopolitics, right? And now all of a sudden I'm relevant. Yeah. I mean, in order for this channel to continue to grow, I kind of have to do a similar thing, and kind of what's been happening is I've refused to do it. Or I haven't found the avenue in which I'm really comfortable in doing it and has worked for me. Like, I could shift to news about the overall market. That's a shift that I could probably make, and that would probably be positive for me, right? But when I started doing that stuff, it was kind of like a little bit popular for a bit, but didn't really go very far. You know, I don't think that YouTube is set up very well to handle current events very well, so I don't know if I want to make a lot of VODs about that sort of a thing. I think short form content would be great, but then it hasn't really picked up on the short form content. I guess I should make a TikTok/YouTube short about the whole, monetary tightening, quantitative tightening versus interest rate changes. Thank you. Pimco says it's too early to declare victory over inflation or recession risks. I agree. We're not there yet. Yeah, I don't want to shift my... I don't want to become a charlatan, essentially. I don't want to be coming in and offering my opinion on subjects that I'm not knowledgeable about. I know it seems like I have an opinion about freaking everything, but really when you look at it, almost everything that I talk about is related to US politics, futures trading, and computer science. So when it comes, like for instance, I do music production. I don't have strong enough opinions about how to do your mix and everything to be making videos about that subject. It kind of drives me nuts, the kind of content that people make, right? Because the issue isn't like necessarily so much that I don't want to talk about this other thing. Like I would love to talk about individual stocks, individual news stories relating to finance, etc., right? But what I don't want to do is you have to come in and use the most clickbaity, clickbaity titles and thumbnails and everything to get people to talk about, to watch, right? I have to come in and say, oh, is BlackRock taking over the world? Like, whatever the conspiracy theory is right now. Probably the one, like I think the thing I could start a TikTok video with right now that would probably work the best would be insinuating that the Federal Reserve is going to keep interest rates low to help Joe Biden get reelected. That would generate the most engagement and views and so forth like that. I'm not going to do that. I'm only going to put information out that I believe is valuable to the audience. And the issue is that social media has become essentially clickbait. It's becoming harder and harder to have real informative content, right? And so that's why I haven't been able to make the shift. I've had a couple of times where I'm like, okay, I'm going to start making a little bit of content like this, and then it goes nowhere because you basically have to clickbait people to do anything, What's your opinion? Yeah, I don't know anything about conditioning luscious hair. Although there is this a viral trend called for women where you it's called the old money hairdo. It's a certain kind of like lighter brunette hair, and then like with curlers and like a big poof in the front and everything. I really like that look. So there's some pretty big icebergs there at 30.5. I think at one point there was, oh no, it must have been at 29.5 because I did see an 11K lot somewhere, or an 11K iceberg. Now you're getting 5K at 30 and 5K at 31. So this is a very, very different situation compared to what we're used to seeing, right? Seeing us come up to a critical area, and I say 112 even as a critical area simply because it's a round number. But that's a lot of absorption that I haven't seen in years. So now we kind of get into this sort of situation because the knee-jerk reaction is it's going to reverse, right? They're absorbing, they're taking it short, and it's going to reverse here, right? That would be the naive way of looking at it. But what actually matters is future orders. Why are they buying? They've bought 15,000 contracts up here today. How many more do they have to buy? I don't know. They could break out, right? So I don't want to play in the area where it's absorbing though. So let's just kind of watch it. Okay, TLA says risk off. That's a good theory. I think that's probably the top theory. Yeah. They're buying treasuries because the S&P 500 is selling off. Now, I don't know if the S&P 500 selling off is so much that it's like it's turning into a pure risk off. I think that if we were having a true risk off, that I would see more strength in the dollar than I'm seeing. But this is the first 20 minutes. It could keep going. No, I don't believe. Do you believe in concepts like that the markets get ahead? Not. It doesn't work like that. So, how do I explain this? People believe that the market is efficient and that the market factors in all available known information, which means that the market should always be ahead, essentially. That like they will move before like news about something will come out because insiders know and trade it beforehand and so on and so forth. But the issue is that these are all kind of naive assumptions based on that there's a fundamental price and that the market is trying to arrive at that fundamental price. What we know from order flow is that the price that we get is merely a factor of people buying and selling it. It's merely a factor of the orders that get placed into it, and the amount of orders that get placed into it do not, basically never exactly match what the fundamentals suggest, because it has to do with how many people decide to trade that move, which is actually a little bit random. And there's a lot of factors in that have absolutely nothing to do with the fundamentals of the economy and so forth, right? So the way that I would put it is the markets try to get ahead and the markets try to price in things, but it is ultimately ineffective at doing that. It's effective enough to run the economy on it, but from the perspective of what we do in trading, it's not very effective on it. If the markets were ahead, then the best strategy would be to know what the fundamentals are and trade towards the fundamentals. That's not the world that we live in. Also, if the markets get ahead, then it would mean that price and value are always the same. Exactly. I mean, I think that most people that believe in that sort of stuff say that, give it enough room that price and value converge and they can diverge for a little bit during market volatility and whatnot, but that they ultimately tend to come back to the same price, right? But this is where, like, when you really get into the statistics, it's kind of like, wow, because they think, okay, there was a move, like the auction theory people. This is a good example, because auction theory people believe that there's like a true value and that the markets are trading around that value. That they're like, okay, this is where value was before. Let's move up. Does the market accept that new value? And if they don't, it will move back down. And they think that that's what's going on, right? And so they'll say, okay, we moved up, but like nothing actually changed. Value has not actually moved up. So I'm going to take the short because I think it's going to reverse. That's a naive assumption, because the only reason it's going to move down is if the orders come, and you're going to need enough orders to push it back down, probably as many orders as pushed it up, right? And if the orders that pushed it up was some fund rebalancing and they're done for the month, and then guess what? It's going to move up and it's just going to stay there. It only comes back down when somebody takes the opposite trade, right? So this whole basically everything that you hear on the internet about value and efficient markets is BS. I'm afraid I have pneumonia because I'm feeling it in my chest as I cough that. And that would really suck if we went another week or two and then, and trying to overcome pneumonia now after that. I worked out a little bit yesterday. I found when you get the cough, that working out reduces inflammation and helps you get over the cough. Markets are ahead, it's just that they are wrong. Well, I mean, markets may be ahead, but that price still does not necessarily reflect all available information. It's just it doesn't. And I mean, ultimately, what it comes down to is that the only way to make any kind of prediction about where the market is going to go on a short time frame is to know what the orders are going to be. You have something that accurately predicts what the orders are going to be, then you can make a price prediction. That's it. And the things there are, like changes in the fundamentals, can predict that, but it's not the only thing. What I'm coughing up doesn't look too bad. So maybe I'm okay. I don't know. I don't want pneumonia. So you get pneumonia and you don't deal with it, and then like your lungs get scarred and it kind of permanently hurts your ability to breathe. I don't want that. You need to bulk up. I would be very surprised if I was ever able to get myself over 180, 190. Nah, I haven't been to a doctor yet. I don't think I'm getting enough of a thing. I coughed there and I did feel something coming up, like I feel a little bit like right here. But only just at once, so I don't know if I've actually got like full-on infection yet, but something to monitor, and maybe if it's still a thing in 3 days, I'll need to go see a doctor about it. I'm not anti-vaccine. I'm not anti anything, to be honest. This is one of those things where it's like I don't particularly care and I don't want to talk about it. Like, my thing is not reading health studies, right? But I've been compelled to know about stuff about it because there was market and political connotations to it. Now I feel like the vaccine is not really a market or political issue anymore, so it's not worth talking about. But I did not get the COVID vaccine. I was already sick, so I didn't need it, was the main thing at the time. And, at the time it was like, well, we need to let the people that really actually need it get it first. And the data that I've seen on it since then kind of suggests to me that it's not worth it to get it. Now, I'm still concerned about it. Like, the whole thing is I'm concerned that both COVID and the vaccine could have negative permanent impacts on my health because of this whole myocarditis thing. I think that because of the medications that I'm on and everything else, that myocarditis is a concern for me. I think that as I get older, having overworked my heart might be a concern. So I gotta be... But I didn't get the vaccine. I have no intention of getting like 6 boosters and all this crap. But it's not a thing. It's not like, I've made my decision. Unlikely to change it. I'm not going to go around and try and convince people about it or talk about it or anything like that, because it's not my area of expertise. I'll explain why I did what I did for me, but I'm not going to give health advice to people, No, so, you see this? You're pulling me in, right? You're pulling me in. The whole thing about myocarditis is that the spike protein itself seems to have a negative impact on your heart. And so that means that for the same reasons that it can be a problem with the vaccine, it can also be a problem for if you catch it. Although I think my understanding is that the science on that is still a little bit preliminary. Like the stuff that kind of got me to be like, oh, okay, was back in 2020. I don't know if there's been more stuff about it. Yeah, I don't know. There's another thing. I tell you, I would really suck to be, well, I'm sure that there are people out there that are like anti-vaccine influencers or something. I'm sure that they don't have very much success and that they're not on YouTube anymore. But, you know, there's this whole thing about like masks, for instance. Are masks effective or not? Well, there have been studies about it, but the studies don't actually say what people think they say. And so the reality is that like a study that actually shows COVID happened, people masked up, and like the majority of the population masked up, and it was like a double-blind trial sort of a thing, has not happened. The sufficient empirical evidence to conclusively settle it has not happened. So the people that are talking about that, you know, that's the constant. I would hate to be in that world. What was I going to say though? Oh yeah, you're talking about bulking up. I lift quite, you know, it hasn't been lately, but I am significantly more fit than the general population. But it is geared towards a very specific thing. Okay. My legs are quite well developed. I could certainly really clean up my diet and really dial that down and really work hard and probably bulk up a little bit. I could switch programs to do a program that is specifically around hypertrophy and so forth. But the reality is that I've already made most of the muscle gains that my frame is capable of supporting. So for me to get above 200 pounds, I would probably have to use steroids. And I'm already 170. I mean, I tend to fluctuate between 160 and 170. So I'm actually very heavy for my size. And it's not fat. It ain't got much fat on me, right? I could probably lose 10 pounds and then I would be like super shredded again. No. That's about how much fat I have on me. I have settled on CS50. What's that? Is that a college course that's offered for free online or something? After going through that liquidity hole, we were able to tick up, but I would suspect that there's still going to be pretty heavy liquidity above us. So perhaps continued uptrend, but limited continued uptrend. If it goes, it's probably going to be like the slow moving train. S&P 500 is trying to dig its way out. One thing we probably still need to watch is oil too, by the way. Tiger Woods may go next after ending his $500 million Nike partnership. Okay. That's interesting, I guess. I don't know why I read that one out, because I don't have anything to say about it, but... Valkyrie co-founder Stephen McClurg expects their spot ETF will receive approval on Wednesday, and trading would then start as soon as Thursday morning. Okay. Y'all told me it was last week, but okay. Better happen tomorrow. I tell you what, if it doesn't happen tomorrow, there's going to be hell to pay. Yeah. Bitcoin is not moving, though, at the moment. That seems like a significant headline, they're not reacting to it. That's a little bit of a problem. I think that ETFs and everything is like an overall bullish thing for Bitcoin, but the day that it happens, I don't know. Wow, you're 6'3"? Tall. I'm just, I tell you what. I'm average height. I'm 5'9", but I have a very thin frame. Like, my wrist diameter is smaller than almost anybody that you'll find. Like, my wrist diameter is the size of an average female. So, I've worked out, I've put muscle on, I've gotten strong. Bone width can only put so much muscle on it. So, like Seth, super, bulked up, just looks shredded and not bulked, essentially. But I have pushing myself like that just affects my trading decisions. So I only exercise enough to get the job done. And not to be the biggest, best looking, fastest, or whatever. Only as much as it affects my mental cognitive performance and to help me live a long life. People there is the average is 6. I don't think there's anywhere in the world that the average is 6'3", though. Good grief. Okay, there was a fairly significant uptick there at 12.0 half. And some stops into 01. And we're back to 4%. Where did we start? Well, I guess we probably could have made $50 off of this trend if we started like early. That would have been super hard though. Well, you would have had to have bought it like right on the open too. To get that good of a spot. Okay, they're continuing through though. So this does look like something that could continue trending up, even though the liquidity is super heavy in front of it, right? The 5 year is definitely just plowing through. I should note, the Japanese yen is not in line with it. It may be slightly the S&P 500, but it looks like in this case that it is flows coming directly into the treasuries. We are one-time framing, maybe. Okay, so there is a 3-year note auction today. Fed's bar speaks at 10 o'clock. So auction may be a factor. They may also just really want to buy the bonds for the longer term, right? Which kind of makes it a little bit more difficult of a trade for us to take, but you could still catch, right? The question is, what do I do now? I don't think I want to touch it now. What does it look like on the volume profile? Interesting. Seeing decent volume in TLT. So, like, they've got a long ways to go if they're going to be beating yesterday's highs. The way that this is trading, net 15,000 contracts long to get all the way up here, that would be very, very difficult for them to get to yesterday's highs. So I'm still a little bit cautious about taking a trade on it. Certainly in a mode where I got to keep track of it because a trade could pop up, right? Well, it looks like that last little move kind of reverted back to 4% real quick. You share that rule? Are you talking about? I can't remember ever pulling the ruler up for you guys. Talking about a ruler for Windows? This thing right here? I find this thing so incredibly useful. Yeah, it's just called a ruler for Windows. Just search for it. You'll find it right away. All NBA players ascending. There was a triple-double the other day that I saw that was like really crazy. I was like, oh, that is like once-in-a-generation talent right there. That's like John Stockton kind of numbers. So I don't know why this just came to my mind, but I should check the weather. We're supposed to get some weather here soon, right? And go to my local news station. It is today and tomorrow, and then Friday, Saturday, Sunday. The next two storms. I could not get my snowblower to start. Couldn't get my snowblower to start, and I want goggles. Maybe I'll go down to the place and get some really cheap goggles. When I go out there, my eyes water so much. I can't handle it. So, I'm kind of popping around now to Reddit to see what's going on. And the top story I see from r/finance is Biden administration to announce independent contractor rule that could upend gig economy. Oh, okay. This is going to be like independent contractor, like if you're not for government workers, but just anybody that's working as an independent contractor for somebody else. The administration will release a final rule as soon as this week that will make it more difficult for companies to treat workers as independent contractors rather than employees that typically cost a company more, an administration official said. The U.S. Department of Labor rule, which was first proposed in 2022 and is likely to face legal challenges, will require that workers be considered employees entitled to benefits and legal protections when they are economically dependent on a company. Okay. The Labor Department said it would consider factors such as a worker's opportunity for profit or loss, investment, permanency, the degree of control by the employee over the worker, and whether the work is an integral part of the employer's business. You see, so if I'm like working only for them and I can only work for them, but I'm an independent contractor, they're going to say, actually, I'm an employee. That does kind of sound like a legal minefield, but probably will get through. And maybe is a good thing. Any change in policy is expected to increase labor costs? Well, yes, but sometimes that has to happen. One of the things that the arguments that I really hate is like, okay, we want to implement this rule, and then they're like, well, that will be bad for taxes or for this thing or for whatever this thing is. And it's like, well, okay, but there's lots of factors, and you can't just say we should optimize everything towards making more money for business. No, that's not how it works. No, I'm okay. Did cough real loud there, though. That is kind of how it is. So, well, yeah, the policy capture of U.S. labor policy is definitely a thing. That doesn't mean that I'm like all in on unions. I don't know. My friend, one of our friends, they had an issue at work, and they were part of the union and got help at work because of that. I don't think it's appropriate in all instances, but I do kind of feel like that flight attendants should unionize. Flight attendants are one of the most exploited labor segments in the economy today. It's absolutely appalling. It's appalling what they pay them. For the amount of time, it's like she'll be gone all weekend and she only gets paid for like 4 hours of flying. It's crazy. Thing is, even though I'm getting stuff and it feels like maybe it's coming out of my lungs, I am not getting the sounds in my chest, so I don't think I actually have pneumonia. If they unionize again, no. So generally speaking, when you unionize, you have to pay the union, right? Because you're basically, there's a service that they're getting, but what you get in extra dues from the company or in extra pay for the company more than offsets what you pay the union. So that's not necessarily such a problem. There is problems with unions, I gotta tell you. It's kind of frustrating. It's like, oh, okay. Businesses have too much negotiating power. They have a monopoly over labor demand. So what is our solution for that? Let's create a opposite monopoly on the supply of labor. Okay. Doesn't really solve the ultimate underlying problem, which is that you don't get a fully competitive market on both sides. Right? Airplane. Oh my gosh. I totally forgot about that, dude. This Boeing thing. I think that at this point it's getting a little personal for me. Like before, when Boeing made all those mistakes with the, it was like the planes would just go into a dive, right? I was like, well, you guys screwed up. Shouldn't have done that. Yada yada. And I remember at the time, some people being like, so shouldn't you buy Boeing now at this point? And being like, nah, you don't. Like, invest in good companies. And this is not a good company. And sure enough, let's pull up a chart here. BA, Boeing. And we got to go to like weekly bars. Okay. Here was when that happened back in 2020, right? They never really recovered from that. They never really recovered from it. I mean, you get from 120 to 240. I guess you doubled the stock, but still. Never anywhere close to their all-time highs. And now they're just getting absolutely decimated. And it's kind of looks like it's been getting worse. It's been getting worse. So, yeah, I don't think I want to be in Boeing. Maybe it goes up, but I think that your money is placed better somewhere else. And to me, it's a little infuriating that there's these kinds of safety missteps. They continue to happen. You know, we got people up there in the air. Know much about pilot demand? Okay, so if you are a pilot, you are easily making $100,000 to $200,000 a year, depending on how much you work and your experience and so forth. The demand for pilots right now is insane. What you do as a pilot is not actually as complex as many people might think it is. It's something that your average person can do, but it's hard to get it. It's like because of all of the experience you have to do, right? Like first you have to go to school. You have to, get education for it somewhere. You can get it from a university, but there's like schools that teach it, right? And then you have to get a certain amount of flying hours, and you have to pay for that too, by the way. Okay. And then you'll have to start at a smaller airline and work your way up, and you have to be at those smaller airlines a certain number of years and things like that. But once you move up and you're to the point where you're at a major airline, yeah, these guys make easy six figures. And if they're working as much as they can easily make 200,000. Because those requirements are so high, there's not a lot of pilots, and the demand for pilots is super, super high. They just don't have enough pilots. Yeah, getting into it is hard. Like, the reason I know about this stuff is because my wife's ex is a pilot. And like, okay, we're all let's see here. It's 2024 now. So we're like in our 40s now. We're all in our 40s. Okay. And it was only like a year or two ago that he graduated over to a mainline airline. And then your pay starts low there. So like he's only just now in your 40s getting to the point where you can make that money, right? And before that, they were dirt poor. Or there were many periods where they were dirt poor. So site reliability engineering is kind of a similar sort of a thing, which is that you don't just take a kid out of college and put on your SRE team. You want experienced people. So it's like once you get in, it's a pretty good gig, but like getting in is hard. Well, it's kind of interesting. They had that little move up there, and I tell you what, the treasuries lately, when they move, it's really fast, right? But they came right back to where the liquidity hole was and haven't done much of anything since. S&P 500 is rallying at the moment. They're about 10 points up. Anyways, the whole thing was about flight attendants, right? So here's the thing with flight attendants is that there's a rule that was made for trains that basically says that they do not get paid until like the doors are closed and the vehicle is moving. And these rules are just, it's kind of an archaic rule that's put in there, and so the amount of time that you're on the clock versus what you get paid is ridiculous, and so what you're actually making is like lower than minimum wage, and they are not, especially the people that are just coming in. Some of these girls, they're a flight attendant, they work full time, they make less than minimum wage. It's crazy, and they should change this law and nobody cares. So it's like there's a regulatory capture that the industry has gotten that's harming people, and you know, hardly anybody even knows anything about it. And of course, how do you deal with that? Because okay, pay flight attendants more, that just means the cost of airfare gets more expensive, right? If they really paid their employees what they were worth. So I don't know. It kind of feels to me like the airline industry is not really very sustainable on its own. It is subsidized to some extent because they go bankrupt and then the government bails them out, right? Change my view. It is in man's best interest to stop using dating apps, disconnect from them entirely, and force society to find a new way for people to meet and date. I'm going to say no. I think that in the future they'll figure it out, and there will be a dating app that is more fair and works better. No, I don't think that means that's what the market is willing to pay for that role. I think that if you had a real market, they would be forced to pay flight attendants more. But the problem is that you're talking about a demographic that has the least negotiating power out there, right? So like the pilots, what always happens is, hey, we're not paid enough. Okay, we'll negotiate with you. They negotiate with the pilots, and then they say, well, we can't afford to really pay you more because we already gave a big thing over to the pilots. And then the flight attendants, they'll vote on it, and they do nothing. And basically, like every time that I've seen a vote happen at this company, like the flight attendants vote on something, they make the wrong decision. Like in situations where I'm like, okay, like, look, they gave you an option. Okay, you can get this pay raise or you can get this pay raise. And I sit down and I do the math on a piece of paper and I'm like, look, this way makes you more money. This way makes you more money. They're giving you the other option because they know that you'll all be short-term thinkers and take this other option that leaves you with less money and is cheaper for them. That's straight up what they're doing, and it always wins. The flight attendants always make the wrong decision. They're not educated enough. Exactly. It's an exploitable workforce. If they had like a powerful flight attendants union, they would have to be paid way more. Way more. Or if it was just a market that actually really truly reflected the supply and demand, I think they would have to pay them way more. It's not what their value is though. Like straight up. Okay. So if it's such an exploited worker, why does my wife still work there? Well, she's worked there for such a long time, okay? And she only has to work there another 5 to 8 years, and she can retire and get full benefits forever, right? So then I can do something like, 10 years from now, quit my day job and run a fund and have enough money saved up to live off of it. And, one of the biggest problems that you have in that situation is the benefits. Well, now we got benefits. That's why. It's the only reason why. Because otherwise, you can literally go and do almost any other job and make more money. Almost any other job and make more money. And the reality is that the flight attendants don't stay in the industry for very long. Number of women that last as long as my wife, very, very, very few. So this comes back to this myth that markets are informationally efficient. They say, well, if they're not getting paid enough, that must mean something about the supply and demand in the market that is, that you're not actually worth that much. That's not true. Okay. Because there can be reasons outside of that have nothing to do with the supply and demand that are affecting that, right? In this particular case, there are laws that straight up work against the employees. If they were subject to the same laws that everybody else was, they would have to pay them a lot more. There are laws about it. There are laws that were basically put in place back when railroads was the thing, like in the 1800s, that still apply to airlines and allow them to underpay. Basically allows them to hide the worth of the flight attendants from the flight attendants themselves so that they don't demand more. It's really crazy. Like, you can literally go and work as a greeter at Walmart full-time and make more money. It's messed up. But it's a great example, right? The structure of the market is creating an outcome that is not in line with what the supply and demand would otherwise be. Yeah, but decent union. Well, yeah, and the mainline airlines, they do that. But this one airline is based mostly in the Intermountain West, where everybody is anti-union, and they don't realize that this is like one of the cases where a union just completely makes sense. Started to get another little run of downside action, but it sputtered out real quickly. We still got 30 minutes. You know, if I was to have taken a trade, I think there was a point where I said 26, didn't I? Yeah, there was, but it kind of moved up and then came back to that. Oh, no. This is what it was right here. Yeah, I could have gotten 26. So 26 to 120. 4, 6, 12 ticks, I guess, isn't terrible. But it's, you know, seeing now that it's 8:30, it took a long time for it to all happen, didn't it? Their seasons are rotating forward. You sure that you just don't remember what it's like to have an El Nino year because we haven't had one in like a decade? So, we're going to get a bunch of winter storms here in the next week, but after that, it's overall, it's going to be a mild winter because it's an El Nino year, or a mild winter, at least in the south. Yeah, well, an El Nino winter it's kind of a weird thing because what happens is it's really warm down here and it's really cold up here. That can sometimes result in really massive snowstorms. If you get like a storm that comes across the Rockies, kind of builds up in the Gulf and then gets swept back up into the Northeast, then you get those monster storms where these cities get like 4 feet dumped on them and stuff like that, right? And that is what's about to happen. There's going to be somewhere in the next week that gets like 4 feet of snow and it'll be all on the news and all that sort of stuff, right? But generally speaking, mild winter. Overall, you get a mild winter. So it's warmer than usual. I mean, this winter has been warmer than usual, right? Now, what it means for the summer, I don't know. It'd be interesting. It's another big iceberg at 112 even, huh? It has been warm. I tell you what, there are weather guys on YouTube. So all the weather people are basically using the same national forecasting models, right? But there are these guys that, because they're on YouTube, they're looking at it way more from a national perspective, and they look at it from a longer term perspective. And so there are guys on YouTube that have been talking about that this would happen, like all the way back in October. That it would be a mild winter, but that you would have a few really big storms that would hit certain areas in the Northeast. I'm really impressed. Personally, I preferred the La Nina where, what did they call it? Like a stream, and we just got snowstorm after snowstorm after snowstorm, and Lake Tahoe just got absolutely buried. That was fun. And I prefer for this summer to be milder. Gets hot in Utah. Hey, there's a significant downtick there. It wasn't on didn't take much volume to do it, but it did kind of break out of the range. Is there a part of the USA that doesn't have seasonal natural? No. It's definitely worse than Europe, for sure. You're in the Midwest, you get flooding. It's really, the Midwest is just terrible, right? There's flooding, there's tornadoes, there's... It's kind of funny. One of the things that Germans always talk about is like, why are houses in the US built so flimsy? Like in my house, you know, the wall is like this thick and all of these sorts of things. And it's like, well, yeah, because when that brick gets picked up by a tornado, it'll take your head off. That's why. Here's an interesting Reddit thread. What are past millennial crazes that would be comparable to Stanley tumblers with teens today? The Stanley tumblers thing is so wild to me because it's not like it's that great of a mug. But all of a sudden it became like this wealth symbol. Like, what? Okay, you kids are a little bit too easy to manipulate, I think. Live strong, brace. Oh, I do remember that. I kind of feel like there's got to be something comparable to Stanley tumblers, but it has to be more about like it's an everyday item and it really became a like a sign of wealth. Like here they're talking about pogs and well, okay, that was definitely a trend for sure, but like it's not comparable. Because we're talking about an everyday item that all of a sudden becomes like some sort of status symbol. Choose which natural disaster you want to be a part of to move to. Sure. I choose drought. Okay. We're fine. One of these days there's going to be an earthquake, man, in Utah. You'll hear about it. You know, there's like going to be like a 7 or an 8 and it'll be big. It'll be like a, you know, okay, like the earthquake, the San Francisco earthquake, there's going to be like one of those in Utah eventually. You know, the San Francisco earthquake that in the 1920s just completely leveled the city. And it was so big that it led to a small recession and like something like that's going to happen in Utah. It's just going to be like this humanitarian disaster. The whole valley is going to be destroyed. That's what they tell us, at least. Nevada is fair. It is. That's why we put Yucca Mountain there. But then nobody wanted to actually put the nuclear waste in the spot. Whatever. How does SPY look? Well, the S&P 500 did sell off fairly decently overnight. We've recovered a little bit of it. So at one point we were down 30 points from the highs. Now, like, it was 4,800 overnight, and we came back down to 4770, and we've since recovered to 4780. So down 20 points from the highs overnight. Not too bad. Should have bought the 4% in the 10s. Yeah. It wouldn't have been a bad trade. I really don't know what's going on here. I mean, something's definitely going on, right? Like, come back over here and look at the cumulative delta in the treasury. So as I was saying earlier, we started at around negative 30,000 here at the session. We had a decently strong trend that came up, so we rose by about 15,000 contracts in cumulative delta, which is a pretty big move for an only 15,000 contract change. But there was a lot of volume in here. Like the divergence between buyers and sellers was not that much, but the absolute amount of trade was big. There was some monster icebergs up in here. Now we've come back down and they've sold about 15,000 contracts to come back here, which kind of suggests that there's probably still some passive buying. But I don't know of any kind of driver that is driving this behavior. The big boys are out there in force doing stuff, though. So 4% would have been the best place to have bought yields. But will it continue from here? Well, I guess we'll see. Well, you'll get flash flooding in Nevada. But the city is designed to handle it. They're just fine. Dude, listen, everywhere that you live has downsides. Which ones do you want to take on? Okay. If you live in Las Vegas, it's hot. Okay. For most of the summer, it is too hot to go outside. Like when it's 110, you don't go out. Okay. And I've seen 120 before over there. Okay. So it gets hot. And, you know, it's not all that great in the winter either. Because, you know, it does get cold enough that it's not like, you know, it's not like Florida. In Florida in the winter is kind of nice, right? But in Nevada, there's nothing to hold the heat in, and so it just goes and it gets cold too. So, like, the weather in Las Vegas isn't actually that great. But it's a place that's growing. So, you know, if you want mild weather and you don't want to go to Phoenix, Las Vegas is a great pick. It's not as great as California or Florida, though. The reason that those are popular is because they have the best weather, the most comfortable weather year-round. Here in Utah, it's kind of an inhospitable place. It's hot, it's a desert, but it's also very high elevation and right next to mountains, so you do get snow. So what's the advantage of living in Utah? You get the greatest snow on earth. It really is. That's the state's motto. It is the truth. Nobody gets as nice of snow as Utah does. When it falls, it's powder. And you go out there and you ski on it. You're just floating on air. It's amazing. You don't get that anywhere else. Okay, but then, you know, if you want to live in the mountains, then you have to deal with driving in that. Kind of sucks. And it still gets hot in the summer. And higher elevation is apparently associated with more mental health issues. So apparently high elevation isn't necessarily good for you. Oh no, Midwest is not the best in calmest weather. Okay, so I was a missionary in Missouri, which is like as Midwest is. And let me tell you, in the summer, okay, here in Utah, it'll get over 100 degrees. Maybe as high as 110 sometimes, but usually around 100 degrees, okay? But it's a dry heat. In Kansas and Missouri, you're going to have 100 degrees and like 90% humidity. Same in Texas. Oh my gosh, it's insane. It's insane. You don't go out when it's like that because you just can't stand it. Because your body has absolutely no way to cool itself off. Okay. So that's cool. There's places like that, like Texas is like that. But then in the winter in Texas, it's pretty mild, and so that's nice. So it's weather's pretty good in Texas. Okay, not in Missouri. All right. I remember like one time trying to ride my bike, because that was our only transportation. So I ride my bike in the cold. And like when you get back, the tears would be frozen to your eyelashes. Like it gets, because it's still humid, but bitter cold. Basically, you have to have full thermals, 3 layers of clothing on, every inch of you covered, etc., for it to even be safe for you to go outside. It gets so cold. So the Midwest, the extremes between extremely hot and humid and extremely damp and cold is the worst. The weather there is terrible. Like, look at where people live, okay? Part of the reason why there's not tons of people that live in Kansas is because the weather sucks, man. Why would, explain this, why would more people want to live in Oregon than to live in Kansas? I'll tell you why. Because having a fairly cool and pleasant summers is better than having this extreme hot and extreme cold every year. Plus, it's on the coast. I mean, the coast matters too, but, you know, you get all the benefits from shipping from the Mississippi River, I think. So you should be able to have, well, I guess there's Chicago, but, oh my gosh, Chicago, then it gets really, really cold. Ooh, I don't think, I've never experienced that. Like the level of cold where you can take a pan of boiling water and go out and throw the water in the air and it turns into snow. I don't think I've ever experienced that degree of cold. Weather. It must be a boring day when we're talking about the weather though, right? Like the weather, that's like that's the most base level of, you know, let's build rapport and talk about things. We have nothing better. We'll talk about the weather, right? But it's going to snow. I'm just warning you guys. If you live in the United States, well, you're probably getting it right now. More is coming. It's going to be nasty. Well, I don't think the treasuries are done. Remember, there's a 3-year auction today, so maybe this move that we had today is related to that, but I'd have to say slightly unusual movement. Things are definitely going on. No, I didn't trade today. I didn't trade yesterday either. I probably should have taken a trade yesterday. Could have taken one today. I mean, it's not like there was an opportunity, although I will say this is moving a lot more than I'm comfortable with. Tomorrow, I don't know. We'll see what happens in the CPI. I'm probably going to be a lot tighter with my risk for the next little while, just because, you know, I took a beating the other day and I still feel battered from it. So, I think what I'm going to do is I'll I'll put more. I mean, I have more than enough money in the account to keep us going for the near foreseeable future. But I think that sometime in the next 3 months, I want to dump a lot more in there so that we can have take on a little bit more risk, perhaps. Because I would like to be trading with 2 contracts more often. Or swing trading. Yeah, Thursday's CPI. So we still got another day. That dollar really is taking off, man. When I saw it there at 102.18, I said, well, it kind of came up there. I don't know if it's actually going to keep going. I'm not going to... I probably shouldn't make too much of it, but it keeps going. And the Japanese yen just got crushed. PIMCO predicts equity-like returns from bonds even after rally, says Bloomberg. Well, it's time for me to get going. I was just kind of pondering if there's anything I could leave you guys with that would help you out. But it's just that 3-year note auction in 2 hours. So keep an eye out for that. Might see some interesting stuff when that happens. What do we got tomorrow? We do have something tomorrow, don't we? Wednesday. Oh, 10-year bond auction tomorrow. And final wholesale inventories. Williams speaks. What is... Oh, Barr is speaking. Due to participate in a fireside chat about bank regulation. That might be an event where he says something that could move him, so keep an eye on that too. Yeah. I don't know what to say about today. Curious moves, but I don't know how to describe it or what I would see about today that would help me remember or find this day again. Well, I'm just going to leave the title the way that it is. And maybe if I think of something later or something happens later today, I can put that in the title. But I'll see you guys tomorrow. In the meantime, stay